Hello, listeners. Welcome to the Morning Market Update, the podcast powered by AI. I'm Joe.
And I'm Sarah. Today is February 19th, 2026. Let's dive in. Starting with the U.S. markets, we're seeing a bit of a tug-of-war this morning. S&P 500 and Nasdaq futures are edging lower, slipping about 0.1% in pre-market trading. This comes after a fairly robust tech-led rally yesterday, but that momentum is stalling as geopolitical jitters take center stage. The Dow is also under pressure, trading lower ahead of the opening bell. Looking at the top movers, DoorDash is the standout story, climbing an impressive 14%. It's a bit of a bad news is good news situation. Even though they missed on earnings and revenue, investors are cheering their pivot toward more aggressive AI and autonomous tech investments. On the flip side, Carvana is taking a massive hit, plunging in pre-market after their latest earnings report disappointed the street. We're also watching Walmart closely. They issued a cautious profit forecast citing trade and labor concerns, and their shares are under pressure. The Russell 2000 is also showing some weakness as the broader risk-off sentiment creeps in. Essentially, the market is struggling to find a right price for stocks right now, as Jim Cramer noted this morning. The multiples are compressing, and with Bitcoin slipping back below the $68,000 mark, the speculative fever we saw earlier in the week is definitely cooling off.
Turning our attention north to Canada, the TSX is navigating a complex landscape this morning. As is often the case with the Canadian index, it's all about energy and materials right now. With Brent crude oil surging past $71.50, its highest level in 6 months, we expect the heavyweight energy sector to provide some cushion for the TSX. The catalysts are clearly the reports of amassing U.S. military forces near the Persian Gulf and the potential for intervention in Iran. While that's driving oil higher, it's creating a risk-off environment for the broader Canadian equity market. In the materials sector, we're seeing a bit of a mixed bag. Copper has moved lower as traders digest the Fed's next move, which could put pressure on some of our major mining constituents. However, the gold miners might see some safe haven flow as geopolitical tensions escalate. We're also keeping an eye on the banking sector. With the U.S. Fed minutes hinting at possible rate hikes rather than cuts, Canadian banks are watching the yield curve closely. It's a cautious start for the TSX, where the gains in energy are being offset by the general global anxiety. Investors are largely waiting to see if the Buy America trend, which saw a record overseas investment in 2025, continues to pull capital away from the Canadian market, or if our resource-heavy index becomes a preferred hedge against inflation.
Taking a look at the international scene, European markets have had a volatile 24 hours. The FTSE and DAX finished higher on Wednesday, but the mood has soured this morning. A major drag in Europe is Bayer, which saw its shares fall 7% after proposing a $7.25 billion settlement in the long-running Roundup case. Meanwhile, Euronext CEO Stefan Bujna has warned of jumping costs in 2026 as the exchange operator ramps up investment, which has some investors worried about margins. Over in Asia, it's been a bit of a fragmented session. Several markets were offline for the Lunar New Year holiday, but the Nikkei managed to eke out some gains, following that brief tech lift from the U.S. session. In India, the Nifty 50 remains resilient, though it's sensitive to the rising oil prices, given India's status as a major oil importer. In the commodities space, as Joe mentioned, oil is the big story, with Brent and WTI both surging on conflict fears. Copper is the laggard here, falling as the higher-for-longer interest rate narrative resurfaces. And we can't ignore the currency and crypto space. The dollar is gaining strength as a haven, while Bitcoin is on track for its longest losing streak since 2022. Even with the launch of new spot SUI ETFs by Grayscale and Canary, the broader crypto market is feeling the chill, with Ethereum and Solana sliding alongside Bitcoin.
Now, let's look at the major corporate stories driving the North American narrative. First, we have to talk about OpenAI. Reports are surfacing that they're close to a massive funding round that would value the company at over $100 billion. It's a staggering number that shows the AI arms race isn't slowing down, even if some analysts, like Mizuho's Jordan Rochester, argue that the AI fear in the market is becoming overblown. Speaking of AI, Riot, traditionally known as a Bitcoin miner, saw its stock jump 9% after activist investor Starboard urged the company to pivot toward AI data center expansion. It seems every firm is trying to catch the AI tailwind. In the retail sector, Walmart's cautious outlook is a major talking point. They are flagging unpredictable trade and labor conditions, which is weighing on their full-year earnings forecast. It's a stark contrast to Wayfair, which just posted its first annual sales gain since 2020. And in the M&A space, Etsy has made a big move, selling Depop to eBay for $1.2 billion. Etsy shares popped 14% on the news as investors appreciate the focus back on their core marketplace. Finally, keep an eye on Blue Owl. The private credit specialist is restricting liquidity for its retail-focused debt fund after an asset sale, sending their shares down 3% in pre-market. It's a reminder that even in the private credit boom, liquidity isn't always a guarantee.
Moving across the pond and into the specialized sectors, there are some fascinating international stories. We already mentioned Bayer's massive settlement, but let's look at New Balance. They are absolutely crushing it, with sales surging 19% to over $9 billion in 2025. Their dad shoes and performance gear are actually gaining ground on Nike, which is a rare feat in the current retail climate. In the aviation sector, Airbus CEO Guillaume Faury has been on the defensive after the company reported weaker-than-expected guidance, citing persistent supply chain issues that continue to plague European manufacturing. Meanwhile, in the emerging tech space, we're seeing the institutionalization of altcoins. The debut of those SUI ETFs in the US marks a significant shift, as firms like Grayscale provide regulated paths for big money to move beyond just Bitcoin and Ether. We also saw some interesting news out of Nigeria. The government is redirecting more oil and gas revenue to bolster state finances, which could have long-term implications for international energy partners operating in the region. Lastly, Goldman Sachs CEO David Solomon is making waves by calling for a rule-based system for crypto. This comes just as Senator Elizabeth Warren is warning the Fed and Treasury against any bailouts for crypto billionaires, specifically mentioning the Trump family's World Liberty Financial project. It's clear that the intersection of crypto, regulation, and politics is going to be a major theme for the rest of 2026.
Wrapping things up with the big picture, economics and geopolitics. The primary driver today is undoubtedly the U.S.-Iran tension, with the UN's atomic watchdog warning that the diplomatic window is closing. The market is pricing in a real risk of conflict. This is sending treasuries toward their worst run in a month because rising oil prices mean rising inflation, and that kills the rate cut dream. In fact, the latest Fed minutes actually mention the possibility of a rate hike, which has caught many investors off guard. When you combine that with the latest U.S. jobless claims, which fell to 206,000, the lowest since November, it's clear the labor market is still very tight. The Fed doesn't have much incentive to ease up if the economy is this resilient and energy prices are spiking. On the trade front, we're seeing some interesting comments from the White House, with claims that the trade deficit has been cut by 78%, though how much of that is due to shifting global demand versus policy is still being debated on the floor.
To summarize for our investors today, first, watch the $71.50 level on Brent oil. If it breaks higher, expect a further risk-off move in equities. Second, the AI trade is bifurcating. OpenAI is seeing massive valuation jumps, but hardware and old-school tech are being scrutinized more heavily on their earnings. Third, the Fed is not your friend right now. With jobless claims down and inflation fears up, the pivot is looking more like a pause or even a reversal. And finally, keep an eye on the crypto-politics nexus. Regulation is coming, and it's going to be a bumpy ride for the altcoin market.
That wraps up today's update. I hope you gained some useful insights into these volatile markets.
Add your thoughts in the comments and follow for more such updates. This is Sarah.
And Joe, signing off.